Happy Monday and welcome to this post-market analysis of today, September 27th. Well, really interesting market session today. Why? Because we had ups, downs, and then downs and up again. Let me explain. Dow Jones, right at the opening, boom, ran up all the way to more than 1%. But in the meantime, NASDAQ was ticking down, almost red in more than 1% as well. And you had S&P 500 in the middle just doing pretty much nothing. And it's not interesting. It's not surprising to see NASDAQ ticking up on the red because at the point when you look at the rates, the 10-year note went all the way up to 1.5%. The yield on the 10-year note going to 1.5%. It's a strong signal that there might be a shift happening here on what the street and the guys with the big pockets are doing, or the stocks with they are buying and selling. So whenever we have interest rates or yields going up on the 10-year note and even on the 30-year note, it means there might be trouble in paradise. Paradise being here the high growth, the tech stocks, your Apple, the FANGs, the NEO, the Palantir, and they were all down today. Maybe not NEO because they recovered and they were already in the trash anyway, but it gives you an incentive, an insight or a direction on what may be coming in the next reopening phase or reopening phase 2, if you will, because money is being shifted from the tech stocks. Amazon was down 2% today. All of these tech growths, Apple didn't move much. So, but you look at the energy sector, up 3.5% today. And for the last 5 days, it's been going up, from pretty much another 3%. So yeah, last 5 days it's been up 10%. And you look at the financials as well, up 1.36% today, and the last 5 days up 5.36%. So financials, it makes sense because if the Fed is going to increase rate as soon as November, well, it means even though it's going to be a gradual tapering, it's good for the banks, it's good financials, all right? Now, on the energy side of things, Goldman Sachs, you can see that here on the West Texas gained almost 2% today. And as much as there is a supply and demand thing, but it's also the very fact that, Delta variant, which kind of derouted the first reopening trade, is now ticking down a little bit. So people are moving money, especially with the rates going higher, moving money from tech again back to these cyclicals, the trades or the stocks that are going to be really favored with a booming into the reopening narrative. Why? Because people are going to travel. That means much more consumption of oil. But the thing is, there is not much oil to meet the actual demand. And that's why Goldman Sachs increased today the levels of the oil based on the Brent. And now they're seeing that reaching $90 a barrel, and last year, they were at $80 a barrel forecast for oil. So it means there's going to be a really booming trade happening here and already started to happen here in the oil sector. So my guess or my suggestion, if you want to either day trade or swing trade, maybe look at some of the small mid caps into the oil sector and into the financial sector, and also some of the other, travel, entertainment. Those are the reopening stocks. Maybe some industrials, materials. Those are your reopening stocks. Those are the cyclical stocks where you have much more value because people, if they are not getting that value on that growth into the tech sectors, NASDAQ, for example, then they're going to look for other ways to get that value. And definitely there is a catch up to be made here in the energy sector, for example. So if you're interested in knowing what are the best stocks to trade or to swing trade, or where you can make the most amount of money, potentially doubling that money in the next months, the next quarter, or going into 2022, let me know in the comment section, and I'm going to do a standalone video on that especially for you.